Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking on the tech sector pulled back today, and that's where we saw the weakness. And very surprising that the financial sector, after an extremely strong 2 weeks, did not see any profit taking into the FOMC, and now we know why. A bullish reaction to the FOMC with the potential for another rate hike in December, and the tech sector sold off, but the bulls were there to buy the dip and protect the higher low pattern on XLK. Support is 58.35, and we bounced off of 58.40. So a clear higher low pattern, bulls buying the dip with a long lower wick, and we're still maintaining a bullish trend, and there's no red flag of that at this point. Resistance is 59.06 and 59.17. The middle Bollinger Band support is going to be above these higher lows at this point. So in order to break the higher low daily pattern, we will have to break the the middle Bollinger Band support as well. The weekly time frame still strong. It is a potential bearish reversal doji. We've been negating bearish reversal dojis all year. So have to be keeping an eye on follow through. That's the main thing. We have to see follow through. If none of these daily charts break their higher lows, the weekly charts aren't going to confirm any bearish reversal candlesticks. So it really boils down to the daily charts and their higher low pattern, which we now have 2 clear levels to be watching on XLK. Apple has clearly lost its higher lows. It's forming lower highs and lower lows, including a dump today on bad news about their watch. $58, 158 support. We built a base at that level. We fell right through it. After 158, the next level was down at 155.11. So no surprise we saw a big move down, but we saw a big move down, and we're now back to filling this gap again. So the gap fills at 149.63. We bounced off of 153.83 from oversold conditions. Still didn't close above. We lost the lower Bollinger Band and the 50-week or the 50-day moving average support, and we're now looking down at just a lower high, lower low pattern to continue. We rejected from exponential resistance last time, so that's where we're looking here in this little gap that needs to be filled. And any bounce, it's going to be up to the bulls. It's the burden of proof on the bulls now. They have to change this trend, which there's no sign of them doing anytime soon. Weekly time frame still fine. The bulls ideally would have liked to have held 155.11, but at this point, the higher low, the level, is 141.64. We are well above that level, almost 10% at this point, so it's not on the radar at this point. The middle Bollinger Band support that's at 152.75, and we've been grinding along it before seeing continuation for those bulls. So a lot of back and forth, but held on and watching to see if we can continue to hold it with another test. Facebook on the daily time frame, bulls holding the middle Bollinger Band support, and not the kind of follow-through day they were looking for after a big bull day yesterday, but they did get a higher low and a higher high, and the back test of the middle Bollinger Band held. Resistance is up at 173.05, and also looking up at 174 as the level that needs to break. So far, Facebook bulls still holding on. The weekly time frame, tightening pattern of higher lows and lower highs at this point. The range that I'm watching is 169.34 support and 174 resistance. So a pretty tight range on this weekly time frame, and we should see a clear break sometime in the next 2 weeks. And it's going to be up to the tech sector overall, in my opinion, to see which direction we do break. As you can see, the candlestick for Facebook today was pretty much the exact same as XLK, just a smaller magnitude. But if the bulls in the market stay strong, I will be looking for the Facebook and Netflix bulls to head to all-time highs. But what we're seeing is the financial sector strength is taking away some of the bullish momentum of the tech sector. So it does look like a little bit of tech money is going back to the financial names as XLF hits all-time highs, the financial sector spider. So the bulls are back in the financial sector, which is taking away some of the limelight from these tech names. We'll see how long they can hold on to their higher low patterns and maintain control, which they are still doing at this point. So I appreciate you watching. We'll check back in tomorrow. Have a fantastic night.